Our market monitor guest tonight says he's buying stocks now, even with all the concerns about Syria hanging over investors. He's Kevin Caron, he's market strategist at Stifel Private Client Group. Kevin, always good to see you.
Good to be here.
I assume you're investing for the long term, but you're not concerned about the short-term headwinds, both political and economic?
Well, we focus on fundamentals, and we are long term. And what we do is look at opportunities in the marketplace. So we have seen over the last year a 20% plus rise in the equity markets, not driven so much by earnings, which are only up about 3%, but really investors who have become more comfortable with taking on risks. So prices moved higher for most of last year. And this is really the first time we've had any substantive pullback. We've had the Dow off about 4.5% in the month of August. You have to go all the way back to the spring of 2012 to find a pullback which would have given a value investor like us an opportunity to evaluate stocks at more favorable prices.
Kevin, you've given us the names of 3 stocks that you're recommending to your clients and also to our viewers tonight. Let's go down the list. You start with Anheuser-Busch, BUD trading. What's your take on this? Why do you like it?
All right, well, we like Budweiser for a variety of reasons. Not the least is its international scope, the fact that it's got a very well-positioned international brand. We think it's tied to consumer trends, which we find to be particularly stable. We think the stock is undervalued here. It has pulled back. We think the stock could be worth north of $110. So we like the stock for a total return play, especially given the fact that there's a decent 2% plus dividend yield on the stock.
You also like Walmart, the #1 retailer, even though lately we've heard some anecdotal evidence about softness among consumers in this economy.
Yeah, again, these are consumer stocks tied to consumer trends. And you point out rightly that lately the consumer has been a little bit weaker. But a lot of what has happened with these companies relates to global weakness. Europe being soft, taxes coming through. We think in time that rolls off. The improvement in the employment picture eventually feeds into consumption. And while the current income and spending patterns for the last month have been somewhat weak, over time you'll find that the consumer has been very stable. So we like Walmart. We think the stock can trade up into north of $80 and provide a very nice total return.
All right, your third stock is not in the consumer area, Accenture, ticker symbol ACN. What's the story here?
Yeah, very consistent company, great balance sheet. This is a company that is positioned to provide consulting services to companies all around the world. Very big company with a tremendous depth of resources. The stock has pulled back here. IT spending has been somewhat weak. Overall investment spending around the globe has been somewhat weak, but it's a great franchise. And as companies are pressured to deliver profit growth in a slowing profit environment, I think it makes all the sense in the world for companies that are looking to drive profitability to turn to a company like Accenture over the long term. So we like all 3 of these companies because they provide good value given the fact that these markets have pulled back in here.
Fair enough. Any disclosures on either of those 3 stocks, either privately or with your company?
Stifel makes a market in all 3 of those stocks. We have a business relationship with Budweiser and Anheuser-Busch InBev, and that stock is also part of our analyst select list.
Very good. Kevin Caron, market strategist at Stifel Private Client Group. Always good to see you. Thanks.